Hello and welcome to today's NinjaTrader Ecosystem webinar event with Alan Fitterman of DMIC2059.com. My name is Tiffany and I'm a platform representative at NinjaTrader. I'd like to mention that it is important to understand that there are substantial risks in trading commodity future contracts and Forex. You should carefully consider whether such trading is suitable for you and will depend on your specific circumstances and financial resources. It is possible to lose all funds deposited with your broker, and it can even incur losses beyond these amounts. Please inquire at the link provided for more information or for a copy of the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation nor recommendation, but simply education in nature. This webinar is presented by NinjaTrader LLC, which is a technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage directly at the information provided. Thank you for filling out that poll. The question was, what types of tools or services have you used from the NinjaTrader ecosystem? It appears that 40% of you are using it for indicators and strategies. 24% of you are using the NinjaTrader ecosystem for education. 2% of you are using it for programming services, and 26% of you have not yet used the NinjaTrader ecosystem. The NinjaTrader ecosystem is home to hundreds of third-party apps and services, all centered around the NinjaTrader platform. With new tools added nearly every day, NinjaTrader ecosystem is home to hundreds of apps and services. You can quickly and easily find the tools and services you're looking for with a quick keyword search. You'll also find information about upcoming webinars and on-demand video archive to view event recordings at the link provided. For up-to-date information, be sure to like or follow NinjaTrader on all social media platforms. NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. To ensure you are on the latest version of NinjaTrader and pick up a free live data trial, please visit the following link. You can purchase or lease NinjaTrader at the following link. If you're just getting started with NinjaTrader, we offer free live training on a daily basis. You can view a schedule of weekly webinars at the following link. We are very excited for this unique event in which Alan will demonstrate how to analyze and manage each trading day with a key structure and logic. Thanks again for your attendance, and without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Alan. Please take it away, Alan.
Thank you, Tiffany, and welcome to everyone. And I would like to wish everyone the best today. We're going to look at our proprietary software, custom built for the Emini on NinjaTrader charts. We'll show you a number of exclusive indicators. Understanding intraday context is a key for advancing all traders, beginners, intermediate, and advanced. The software is based on real-time research over many years. Let's quickly go over today's program. We'll look at how we interpret time and price analysis and how our proprietary software codes recognize trend or non-trend days, and how our special team of indicators watch and signal in real time the projected highs and lows of the intraday market. We look at a new value area indicator. Volatile intraday markets need parameters, and we will see how we recognize volatile days and their parameters. We have put aside the old lagging indicators to show how each intraday market is built on our exclusive structure and logic foundation. To recognize intraday context, structure, and logic, we use time and price. Now, we could call that time and space a universal logic base. Archimedes' combinatorics advanced the theory that hidden keys can unlock much larger patterns, which fits our intraday financial markets research. More currently, Benoit Mandelbrot discovered fractal geometry and began writing about it around 60 years ago. A fractal is a geometric shape that can be broken into smaller parts. We were happy to find key Mandelbrot findings coalesce with the DMIC software. The main software elements are the relationships of each new daily matrix combination. By combining the order, time, and space of the daily matrix combination, time and price elements, or time zones of market movements, are indicated. Unique indicators called time teams check and balance intraday market movements. You will learn to recognize and build on your favorite daily matrix combinations and its specific intraday context. The daily matrix combination indicates the key times of each new day, the key wave number for each new day, and the key prices of each new day. So together, logic and structure, time and price elements set out the working foundation of each new day in real time. We're looking at a slide of the ES chart of 11/26/2019, and it shows the software on both the chart and the panel by the chart. The chart and the panel graphics are easy to see and act on. The chart is a real-time graphic overview of panel information. The panel has 5 headings relaying key information. The top panel heading is DMIC, under which are 4 coded time and price inputs: high price at the top, low price at the bottom. This projects the preferred direction of each intraday market. Next heading is ranges, showing ranges between specific coded times and prices. This indicator organically updates every morning. Directly under ranges, key messages are flashed instantly. In this panel, we see under DMIC the signal. I'm sorry, I'm on the wrong chart. Let's start again. The DMIC combination has 4 prices, highest at the top, lowest at the bottom, and then the 4 ranges that show us the ranges of each code line and the full size of the daily matrix combination. Directly under ranges, we see that messages are flashed instantly, and today we see that it's a full combination, meaning the range of the combination is full, and we'll learn to see what that means. Under DMIC, we see the message classic up. This is a clear indicator, classic up and full, that this is an upside trending day. These key DMIC measurements are highlighted on the chart by rectangle 1. That's this rectangle here. And you can see how key this information is and how it worked in the rest of the day. Basically, the high of the daily matrix combination, which we call rectangle 1, held the market most of the day. And as we knew it was a preferred classic up day, we were quite happy to bounce off the high of rectangle 1. But as we know, the market doesn't go straight up or down. It comes back and tests price points, and we have to know what's going to happen at those price points. Under versus island in the panel, this indicates the position of the DYC with other code lines of the DMIC codes. So the DYC is the magenta line you see, and it's important to know what that relationship is to the rest of the code lines. Under 5 minutes, we get the open, high, low of our orange time team. The first open orange time team on the chart has 2 BISC lines, high and low. So here's our first orange time team bar, and here's the BISC line showing the high of that bar and the low of that bar. This becomes a very important bar through the day, and you'll learn how important these prices are as we move through the learning experience. We need time to coalesce with price to confirm reversals or breakouts from the daily matrix combination rectangle 1. The next panel is headed DMIC up and down. The red side is the downside. The green side is the upside. In red are the breakdown prices with support levels. In green, the breakout prices with resistance levels. The standout orange support and resistance prices are key. Today, we see a duplicate with the level 1 resistance price and the market reversed at about 31.41. So we knew here that the resistance price was 31.41, and we saw a resistance at that price where it checked back or close to that price, where it checked back to the high of the rectangle 1. To the left of the chart, the M, a black line, is the key prior daily matrix combination rectangle, and the red is the prior day daily matrix island rectangle 1. The yellow on the chart shows the prior day high and low. What we noticed here is that the breakup is above the prior day high. That's an important signal that we learn to observe and gives strength to the upside projections. Clearly visible are the time and price tests where the market failed to re-enter rectangle 1. And here you see those tests. And again, this was expected. What were the ongoing real-time checks? The orange time team signals are ongoing checks. The AM orange time team signal, this first one, is an upside signal because as we started on the DMIC day, we found the market went below rectangle 1, but the orange time team opened above rectangle 1. This is an upside signal. The PM, the last orange time team signal, was above, closed above rectangle 1, and this is an indication that we expect the market to close above rectangle 1. Now we see the PM signals LOD. This LOD signal means lower the DMIC day, and it indicates a probable reverse point. Now this reverse point is coalescing with the higher rectangle 1, and later on we saw that the orange time team opened above rectangle 1, and we got another lower day signal. So how do we trade this? Well, we'd probably place a buy at the level 1 purchase of 31.3675, and you can see once we hit that number, the market went up and closed at the higher day at about 31.44. I want to go back to this rectangle number 2. This is the afternoon rectangle in which we measure the afternoon market. Once we see a bar close, a 5-minute bar close above rectangle 2, this is another signal that the market's going up. Now we see here again on level 2, there's a breakup at level 2 at 31.3875. It's no coincidence that this rectangle 2 stopped just above that. We then got a close above that rectangle 2. The market broke through 31.38 and went up to the 31.44 price. The market closed at the high of the day. I want to go over now to quickly show you the latest addition to the panel. This is a chart of yesterday, actually, 4/1/2020. We've added the day range meter. We were concerned about making sure we understood the average range of each day. And this is the range from 9:30 a.m. to 4:15 Eastern Time. And it shows you the prior day range, the 5-day average, the 10-day average, and the 30-day average range. Yesterday, the NASDAQ fell from the higher day signal that we got right up there. As we said, that's a reversal signal. The market fell below the 2 BISC lines of that signal. This is an indicator that we can expect to go down. And as you can see, there's actually another key signal here. This 5-minute bar opened and closed back inside the high of the rectangle 1. This is an indicator that we expect the market to move further down. As you can see, once it got back inside rectangle 1, it did indeed go further down. So actually today, we got from the high of the day, and if by any chance we got that breakout also through the low of rectangle 1, I think the market moved quite a long way in that day. Let's move on to the next chart. This is the ES chart of 12/18/29. A clear indicator today under the ranges is that we expect a doji day. This means the market is projected to close within about 1 to 2 points of the open price. Additional confirmation is signaled by the DMIC being 100% inside the prior day high or low. So here you see the yellow lines showing us the prior day high or low, and here we can see rectangle 1 is 100% inside that prior day high or low. This means no strong breakouts are projected, preferring reversal at AAA support and resistance. The high of this day was the AAA resistance price at 32.02, and there we see the high of the day. Consequently, the market closed within 1 point of the open, and this was our doji day signal. So again, we would not have traded trend breakouts today. We would have avoided that and looked for the first hit of a resistance price and would take in a reverse from that resistance price. Again, we have to understand context in all of those, and that's part of the learning sequence. This slide is slide of the YM chart of 11/27. And in the YM chart, we see down here a duplicate. This is a duplicate between two DMIC code lines, the DYC code line and the C1 code line. This duplicate of DMIC prices can be a key barrier for the market. Additional confirmation for this barrier is shown on the left side of the chart, where the red vertical line represents the prior day daily matrix island combination. So the prior day daily matrix island combination has coalesced with the low of today's daily matrix island combination, and this supports that barrier theory. A table of key duplicates and the market's projected response to those duplicates are included in the manual. It shows which duplicates are barriers and which duplicates the market prefers to break through. Let's move on and we'll look at 3 new proprietary indicators. The first is the chart signal, the golden rectangle here. This we call rectangle 3. This coded rectangle only appears after certain early morning action has occurred, so it's not an everyday indicator. The golden rectangle is a strong indicator when it coalesces with the DMIC combination and range, which it did today. The DMIC panel signal is classic up. The golden rectangle 3 has only set above the daily matrix combination rectangle 1, signaling an upward breakout is preferred. In the panel, the DMIC indicator classic up is joined by the range indicator 100% above yesterday's high, signaling the DMIC R1 is 100% above the prior day high and prefers upside movement above the breakout price of 83.84. So very, very strong indicators that we have an up day today, and we knew that very early in the day as soon as the DMIC software came up. Staying with this chart, let's look at the new value area measure. The great majority of the time, the high or low of the value area used the next day is the high or low of the current day's DMIC rectangle 1 and the prior day. And so if we go to the prior day, we see that the prior day high of rectangle 1 was 83.27. The current day high is 83.80. A DMIC value area breakup is signaled when the breakup encompasses 2 consecutive daily matrix combination highs. Yesterday's high, today's high. We got a signal that we're 100% above yesterday's high. We have a classic up signal, and we have rectangle 3 giving us more upside signals. So we can see, beginning to see hopefully how we read the chart and how this is valuable information, not only early on in the day, but as we move through the day. This is an ES chart. It's from 2015. And the reason I show you that is because in the manual, in the reference manual, we have charts going back 12 years, and you can look at that research. It's part of the manuals. Now, this shows a C1 mid, meaning that the C1 code line is between the IO and the MN code line. This signals a reference to the AAA orange support and resistance prices. So we go down here, we've got a C1 mid, we look at the orange resistance prices. The market reversed at about the 1976 price. It went just above it. Having received that reverse signal, the market reversed 12 S&P points in about 35 minutes to the AAA support price at 1964. You can see how quickly how we got the AAA resistance and how it reversed down to the AAA support to carry out the indicator's intentions. We're looking at now a NASDAQ chart of 11/20/2019. We see a strong DMIC2059 time and price reversal signal. Under ranges, we see the signal neutral, indicating a volatile day is probable. Preferences for the market to travel between the high and low of DMIC rectangle 1. So here's the high and low, and we're expecting the market to travel at least between those two. The orange time team signal at the top here indicates a reverse. The signal HOD is clear. To the left of the chart, the prior day red Y indicates the prior rectangle 1 low, and it's matched by the current day DYC line at about the same price. So we are getting lots of confirmation here that the higher day signal is probably a good signal. And of course, we relate that to the neutral signal under ranges. So we are expecting the market to move downwards. You can see that a fairly tight stop was usable. The market didn't go, actually did not go above the HOD signal during the rest of the day. The market reversed back inside the rectangle 1, falling through the vertical sidebars. And this green sidebar, by the way, shows you the high and low of the prior week. So this was the high of the prior week, and the market went right through that, and also had fallen through the key daily matrix combination, the last key daily matrix combination, which we always watch carefully. So lots of signals that this was going down. The market fell through the prior day low, that yellow line. Again, a strong signal. And given the time, we can expect this market to go down, and maybe we can trade further. We look at the level 1 breakdown price at 83.01, and if we'd waited there, well, the market fell 40 points in 5 minutes. Obviously, these are volatile days. From the top of the HOD signal, the Nasdaq fell about 100 points. Let's highlight the same-day signals by looking at our easy-to-use cross-market chart checks. Let's look at the same-day daily matrix combinations on the ES and the RTY chart. This ES chart had similar setups. We see the green and black and prior day daily matrix combination all matching up with the DYC line. Again, we get an orange time team HOD signal preparing us to move downwards. The orange time team HOD signal was the high of the daily matrix combination day. The market, again, never moving above the HOD signal. The market broke below the M black DMIC of the week line, below the prior day low, to further fall through the breakdown, the L1 red price at 31.07, and the ES fell 27 points from the higher day signal on what was a normal day. This was before the extreme volatility we now have. Now, this indicator stretches across 3 markets as a cross-market check. So let's look at the RTY on the same day. So this is the RTY chart on the same day. We see very similar movements. The orange time team HOD signal coalesces with the prior day DYC code line and the yellow prior day high line, which is a few points higher. The market is never higher again than the HOD signal today, even on the Russell 2000. Time fell into place when all 3 markets fell about the same time. Today, the RTY market was about 5 minutes behind the ES and Nasdaq. This was given a 5 minutes heads up for anyone trading the Russell 2000. The signals were all very strong to the downside on the other 2 charts, so we would have expected the downside on the Russell 2000 to have followed in place. The Russell fell below the left side of the chart indicators, and the breakdown of the RTY coalesced with the prior day sidebar also. There were numerous signals among the cross-market DMIC charts to indicate a sell. Volatile markets can be very difficult and extra care is needed. Certainly if you're a new trader, you should be very, very careful with these volatile markets, keeping tight stops and remembering to protect your capital, and remembering when you're starting not to lose more than about 1% of your capital in any one trade. But let's look at the volatile markets today. The relationship between the DMIC combination and ranges is a key, as always. But as an example, a neutral chart with a C1 mid indicates a preference for 3 waves inside the rectangle 1. Carefully observing this chart shows 3 intraday waves inside the DMIC. So here's wave 1. We've seen that. Later, wave 2 comes back up, and here we get wave 3 back down again. How did we expect 3 waves? It's a neutral chart, which indicates volatility in today's market. It's a C1 mid, which indicates that the likelihood of 3 waves inside rectangle 1 is a probability. we can see that we got a LOD price here. The market went down a bit further than the LOD price. And sometimes if you're not comfortable with that, you must understand the context, but also you can wait for 3 bars to see whether the market comes back up above that price. Again, context is everything, and that's again part of the learning curve. The market reverses inside the R1 low, above the R2 high. Again, that's how we got that wave back up to the R1 high. Then we got the HOD, higher day reversal. This was something we actually expected, given the fact that we expect 3 waves, and the wave went down 18 ES points. In the manual, you'll find detailed guides. We can't cover all the nuances here because of time, but also in the guides, there are additional very key proprietary signals. And we're always available for your questions as you go through the learning sequence. Let's move on to another chart. A quick review of the higher day and lower day signals. Here, the lower day signals you can see duplicate with the MN low code line of the rectangle 1. The market never moves more than 1 point below the MN price. The importance of the MN code line construction is a key discussion in the Express manual. We learned that certain combinations with the MN code line means that the MN code line is going to play a major part in today's market. Time and price team signals coalesce to give additional support to this continuous LOD signal. The market was just unwilling to move down past this MN code line today, and we expected that. The MN price also duplicates the AAA support price at 31.3375. So again, we had good reason to believe that this was a strong support. The market rallies from this lower day signal to the higher day, or about 10 points. So let's summarize using the Russell 2000 chart of about 10 days ago. This was 3/24/2020. Again, please simulate prior to trading these extreme markets. The range is neutral, meaning we believe we'll get a wave inside rectangle 1 from high to low. The rectangle 3 gold rectangle is only above the rectangle 1, showing us that we prefer to be to the upside. The low of the R3 duplicates with the R1 low. So again, we're seeing a strong indication that this will probably hold. Now we got an LOD signal here, and this signaled an upside movement, so the market wasn't quite ready to get to the low yet. And this upside movement went quite a way up, actually. It went 35 Russell points off that lower day movement. Going back to around 2:15, the market bounced off the R1 low. So here we have the low of the R1 and the low of the R3. And the market bounced here and it went back up to the high of the daily matrix island combination, and we expected that. We then got an interesting breakup at 3:40 p.m. well, here, we got a breakup. We got a higher day signal. The higher day signal from 1085 pushed us back to the high of rectangle 1, and we bounced off rectangle 1 at 340, and at 340 we saw the market shoot up about 30 points. It went up through rectangle 1, through rectangle 2, and through rectangle 3. The market had traveled up 60 RT white points from the R1 low to the high of the day. This becomes fairly easy to read if you're concentrating and once you've been through the learning experience. Again, these are proprietary indicators. They're not available anywhere else, and we're happy to show them to you. There are additional indicators such as key proprietary 30-minute bar signals, and understanding context and intraday logic are essential edges in today's markets. I hope you'll join us. We are dedicated to helping you through the learning sequence to the point of personal confidence. And we do have a special offer for you today. Please contact us at any of these contact places. Our offer today to anyone who attended the webinar is 30% off all costs shown on our website, and please use the code NTW. So again, thank you very much for being here today. I'll try and move over to take some questions if there are any right now.
Were you able to get that chat window open, Alan?
I think I've got it open now.
Okay.
There was a question from Hello. Are there any more recent examples in the 2015 chart or than the 2015 chart? Yes, I showed them to you. The reason I showed you that chart was because to let you know that the research goes back 5-10 years. Alan asked from the promo info, I was very interested to see your presentation. He didn't have enough background to follow the discussion. You can re-look at the info when you get the archive, and it is a learning experience. It doesn't take that long. The express manuals you can read in the weekend, but you know, anything that's worth learning takes a little time. Do these Chuck Wilmer asks, do these signals come up before the market open or after the market opens? These signals come up at 10:30 a.m. because to understand the intraday market through the end of the day, we need to analyze the first hour of the day. Now, the prior day's daily matrix island combination is available and is still relevant. So all you need to do if you want to is move back to the prior day, and you'll know what the market's doing in relation to that day. And when the 10:30 time comes up, you'll see today's indicators, again, very relevant through the end of the day. So thank you very much to everyone for being here, and I hope we'll hear from you. And again, we're very willing to spend the time. The manual, the express manual gets you through over the weekend. You can read it and then start simulating, and then use it when you feel you're ready. So thank you very much.
Okay, I'd like to give a special thank you to Alan Fitterman of DMIC2059.com for a great presentation. Everyone in attendance here today will receive an on-demand recording of today's event. Please keep an eye open for that email. NinjaTrader ecosystem is pleased to sponsor these weekly vendor events as a value-add service for our clients. If you find value in these events, we hope you'll attend them on a regular basis. We'd like to remind you the information was provided in this was of DMIC2059.com and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spend with us. Enjoy the rest of your day. We hope to see you in future webinars. Happy trading from all of us at NinjaTrader ecosystem. And again, thank you so much, Alan.